Welcome back. This is Corporate Radar. Well, as promised, let's get straight to Concor's Q4 numbers. It reported a mixed set. The volumes came in better than realizations. Their margins also improved. Mr. Sanjay Swarup, the chairman and MD of the company, joins us on the show. Good morning, Mr. Swarup, and thanks a lot for joining in. Well, for the past year, your volume growth was around 8% odd. Earlier on, there was some kind of skimming down of guidance. But that's about the past year. Going ahead for FY25, what kind of a volume growth can you guide us? And if you could break it up for us between EXIM and domestic.
Yeah, good morning. We are expecting a very good growth in this FY25. In EXIM, we are expecting around 15% growth. And in domestic, the growth will be around 25%. So overall, we are expecting a growth of 18 to 20% in this financial year 25.
Right, got that. So hi, good morning. Prashant this side. Mr. Swarup, how were realizations in the fourth quarter in both export and domestic versus last year?
Yeah, realization have seen a good growth in this fourth quarter as compared to the Q4 of FY23. And we are seeing a good margins and good top line growth. In fact, the Q4 of this financial year has been the ever highest in the company's history. And it was the Q4 of 23, which was ever highest. Now we have broken that record. And we have posted a highest top line in this FY24 Q4.
Mr. Swarup, I wanted to understand your strategy going ahead. Because there was a report that I read from BNP Paribas, a couple of months or so ago. They were talking about your realizations, your pricing being relatively higher than some of your peers. And that's what could lead to some market share lost as well. So what's the strategy out there? Will you look at skimming down on pricing to go for market share? And in that context, what is your market share?
See, it has been the company's strategy to give best service to our customers at reasonable cost and without sacrificing any of our margins. So that strategy will continue in this FY also. We will not be compromising on our margins, but we are giving more and more incentives, more and more facilities to our customers. Like we have adopted IT in a big way. Logistics app has been a big help for first mile, last mile connectivity. Similarly, at our flagship terminal, we have adopted AI-based terminal management system. And we are actually giving all in all these services to our customers, which have been welcomed by them. And we don't sacrifice our margins. But of course, if due to our operational efficiencies, we save some money, part of that we share with our customers also. But that doesn't mean that we sacrifice our margin. Our margins remain intact. We are operating at an EBITDA of around 25%, which is in the logistics sector quite reasonable, quite handsome. And we continue to be maintaining EBITDA around this number only.
And you were going to tell us about market share as well. Have you lost some market share? Is Gateway higher in select places?
Actually, we have not lost market share. As far as the rail-based containerized transportation is concerned, we are maintaining a market share of between 60 to 65%. This we have been doing for the last 3 years. And we are very hopeful that we will continue to maintain this market share and maybe gain some market share because of the new products that we are going to introduce in this financial year.
Okay, got that. This is for the rail-based containerized segment, right? 60-65%. And you're saying you may look to gain as well. Right. Could you tell us what is your share of revenue from value-added services and what's the target going forward?
See, value-added services constitute an important part of our service to our customers. We have introduced a business solution segment 2 years back, which has been a very successful initiative of the company. It's a sort of vertical integration to our already services that we were giving to our customers. It involves the various end logistics like first mile, last mile, giving custom clearance facilities, fumigation, everything we do at our terminals, it has been welcomed by our customers, and of course it gives us a reasonable amount of margins as well as revenue. At the moment, I cannot share that number because I don't have it with me right now, but it gives us handsome margins as well as top line to us, and customers also prefer these services to be given by Concor rather than going to any other operator.
Okay, all right. Mr. Swarup, one tricky aspect which the street is a little bit skittish on is the LLF. That's the land leasing fee. I'm looking at a release and there's a demand coming for 3 of your terminals that amounts to around 700 crores. So tell us how, is it resolved, the understanding that you'll have, or is that still far from resolved out there? The demand is close to 700 crores. Give us some color on that as well.
See, LLF demand is not 700 crores. I don't know from where have you got that number. LLF demand is around 400 to 420 crores. So we are very much clear on that, and we have resolved this issue with the Indian Railways. And this is a 7% growth in LLF every year. And it's a continuous exercise in my company to surrender the railway land which we are not using, or which we find that it is not giving us the due returns. So that exercise is continuous, and we are surrendering the surplus railway land and without losing any business. And we are commissioning more and more terminals, purchasing our own land. So this has been a continuous exercise by the company. And this year also we have commissioned 3 MMLPs at Jajpur, Kadakola and Paradip. And this exercise will continue in FY25 also.
All right. So I'm looking at the page 11 of your release, Pilor, Tungla-Kabad as well as Murabad. If I group all these 3 numbers together, the key audit matter that you have written about, that summation of 3 of them comes to around 700 crores. So I asked you that. But you're saying that that's resolved, right? There's no issue. There's no need for the street to be worried about
that
this.
That is fully resolved. Yes.
Okay. All right. Well, thanks a lot, sir, for joining in. I think we've got most of the details. Just one more question if we can squeeze in before, we let you go. Any update on the divestment post the election? Should we expect something?
See, that is the policy of the government. We are following the guidelines that are being issued by the government. And if there is any update, definitely you will get it.
Okay. All right. Mr. Swarup, we'll leave it there. I look forward to getting more updates from you as we go along and, for another chat. Thank you very much for joining us here on CNBC-TV18. You got